the trade thesis can be the same, but your sizing in is a lot. There's a higher level of understanding of scaling in and scale, and SSR and who's buying the stock. Because like people dip buy if the stock is 10% down. It's so actually if a stock is like I only short on strength either way. So I've never shorted on weakness. So if a stock, I've never chased the stock down. So for example, if a short report if a fund or what do you call it, short report outlet comes out and says like Hindenburg, I don't know if you're familiar with Hindenburg, Vesh,
Yeah.
maybe you are. So if they say, oh, this stock is a scam, and then everybody shorts it, and the stock falls 3%, 4%, 5%, I'm not going to chase that down. I know myself. My strength is shorting on strength. A parabolic move that like comes out of nowhere, little news, the float checks out, no institutional presence, everything checks out. You go through your checklist, and it checks out.
Hey, all you trading enthusiasts out there. Are you ready for some insider trading talk? By the way, I'm doing this because I received a lot of love for all the episodes that were related to accounting and finance. And luckily, I found someone who has a lot of experience in this industry. So, let's roll. You're gonna listen to someone who has been doing this full time and making a living out of it. Yes, you heard it right. He's very close to making $1 million in trading profits. Today, he kind of breaks his strategy down into different criterias, and it's all mentioned in this episode. So let's welcome David Capablanca. Okay, David, welcome to the Sarvesh Maria show. It's my honor to speak with you today. How about you go ahead and tell our listeners like what kind of trader, how will you describe yourself as a trader and how much profits have you accumulated till date?
Okay, so I'll describe myself as a trader. I am a short seller of small caps. I go, but I consider myself like a composer of like a symphony, approaching the way I trade. Just like my background before trading, I'm an architect, so architect has to consider many different things in order to realize a building's completion, like a composer of a symphony, and realize all these instruments that come together to form a symphony, and they got to know the instruments. The composer knows all the instruments in his head and writes the composition down, and then like that's how a symphony is created. So like the way I trade, I consider a lot of different things, and it all comes together like a puzzle, and then I make quick decisions, high pressure decision making. So so I first of all, I know technicals, fundamentals. I'm heavy into understanding dilution and the whole dilution process of the small cap stocks, because so understanding all of that, and then understanding things outside of that, like what's going like reverse engineering a short squeeze into, because there's no exact data to see like when the shorts, an indicator for short squeeze. So like I consider many different factors that kind of indicates when the short squeeze is likely to happen, and try to avoid that, and just going through, not on top of everything with that, a very high level of discipline comes into play, and a high level of the mental game. So I'm constantly, it's just a lot of different things coming together. And for me, ultimately, I want to show up in the trading day, and like trading for me is like playing the piano is the goal. It's like just like calm and enjoyable, and I'm flat with all my positions at the end of the day, and I have a nice dinner, and I go to bed, and I do it again in the morning. Just like good routines, good habits, and just like a state of flow. That's what I'm going for.
Correct. So first I'll ask you, you mentioned you primarily describe yourself as a short seller. So like like for some people who don't know what is short selling and who's a short seller, could you describe it?
Yeah, so short selling. There are, okay, so in the small cap stocks, these are stocks that have a 250 million market cap or less is ideal. In certain situations, I'll dip out of that a little bit higher, but not many situations. These stocks are very bad companies. They need cash, and they inflate their stock prices up while their supply is low. while their supply, that's a whole another thing of understanding, is like the floats. So when the float is low and the float is tiny, these stocks can manipulate, or like they can put out a press release and their stocks can go flying, exponentially. We're talking about hundreds of percents, 100% to sometimes a couple thousand%. It sounds ridiculous, but I've seen it all. And so while the stock surges up that high, a lot of times the company needs cash, so they'll do an offering. They need to do a raise, or they'll dip into certain dilution that they have. They can cash in on their stock being that high, and through ATMs, um, just another regular offerings. There's also warrant holders, which is a whole nother thing, which is like existing warrants from investors that have invested in this company, and they want to cash in too. And sometimes they have a lot of warrants, talking about millions of warrants. And so if a stock is trading, let's say, for example, like a 2 million float stock, and they have 9 million warrants, which we saw yesterday, that stock can squeeze exponentially, and then they cash in their warrants. And as a short seller, you can't just short sell everything that's up. And oh, this company sucks. This company has no cash. This company has dilution. That's not it, because there's games. It's like a cat and mouse. They kind of dangle these days. They dangle the warrants. They dangle the dilution in front of a lot of short sellers, because a lot of people have short selling accounts now. And right now I have all these, one, two, three, five brokers short selling it. So I have access to these. Everybody has access, and like you have a lot of. It doesn't take much. These are small companies. Small caps is a, it doesn't take much to move these companies. So like a gang of like 100 short sellers can squeeze this stock exponentially. Short with small accounts, not that small, but like 50 to 100K accounts. So with 30 to 100K accounts. So like these days they play games with the dilution. They dangle it in front. It's like, okay, we have all these warrants right here, guys, and then the stock goes a little bit above the warrants, and they don't dump them, and then the short sellers keep it shorting, 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 and it squeezes them. So the warrants. So dilution, for example, there's a lot of things called exercise prices. Well, these dilution, they have a price. So as long as the price of the stock is more than the exercise price, they can make money from it. Now, the thing is, this is where human behavior comes involved. This is like a high level concept. I mean, we can go into it, Vesh. You can ask me whatever you want, man. You got my full attention. I'm open book. I'll answer anything. But yeah,
Now I'm listening.
so the human behaviors, we tend to take profit after a certain level, no matter who you are. Like your greed is gonna, let's say if you have a stock, you bought a stock at $1. Like if the stock is $10, you're probably gonna sell it. That's exponential, man. It's really hard to sit on that. I don't care who you are. So like the same thing happens with the warrants. So like there's certain levels, and when my ideal sweet spot from years of experience and tracking and all stuff like that, and just like being like, there's an art and a science to it. It's not exact, but ideally it's anywhere from like 15 to 30% up above those prices. Historically, that's where they want to start cashing in. Now these days, they know that this is where like the art comes in. You got like you're feeling things out, you're observing things daily, the market environment, etc. These days they dangle those warrants, and it's squeezing way higher than 15-30%. It's going 100%, you know sometimes more than that. If it's a foreign stock, like for example Chinese stocks, the Chinese, they have a lot of patience with these things. They don't cash in right away. They wait till like 1,000%. Sometimes they don't care. They wait till like it just goes, and then it just like goes forever. It goes the 4,000% up, and then like when it's done, when it exhausts, then they start to dump their shares or whatever. So it's almost like cultural too. So it's like market environment and culture, depending on who is in this stock. Is it a whale? This is my game too. I come from a chess background also. Um my family was into chess a lot, so I grew up playing in tournaments and stuff. It's like, who's your opponent? Is it a whale? Is it a retail? Is it the Robin Hood traders? Like, who's in this? Is it a Chinese boiler room? Is there like algo presence in there? Is there institutional presence? Like, who's in this? Are you competing against a? That's why I look at high institutional ownership. I avoid those. Anything that's up, even if 40%. I know some people say have rules that say it's over 60 or 70%, but for me, it's like 60, 70% is a no trade for sure. But if I see 40% or 35%, I'm like, I gotta see the price action of this stock because one of those guys that had one of those institutions, they could just turn on an algo. They have algorithms because these are institutions. And if I sense an algo on the tape, I'll be like, okay, is this a squeeze algo? Is this a VWAP algo? Like, I'm coming to this conclusion from experience and stuff. So like that's why it's important to have like screen time. So you're staring at these things. People talk about screen time, but when you're staring at things for so long, you get to see the level two and the tape on certain. You get to see sometimes dark pool prints. This is why education, matters. You got to do your. I read books on this and I watched YouTube videos on this and like see it for myself. And I'm like, why is that thing printing like that? I don't see it on level two. Oh, those are dark pools. Oh, level two. Like why with SSR you got to see where the short sellers are. Someone could be plotting. A lot of institutions they have like these days. Vesh, have you ever heard of like bookmap and stuff?
Correct.
Probably, right? Yeah, so I imagine sometimes, and this is speculation, that some institutions or some foreign, like Chinese, whatever, I know the Chinese do this. They plot out just like a book map, like where the short sellers are, the location, like a congested area of shorts. They're like, we got a bunch of shorts at this price area. Let's squeeze this exact area. And then so like so it's like you get to see the game. So like this is all through observation of staring at it. All the how it like why is like, why is the level two or the tick like why is a stock ticking a certain around the VWAP? Why is it not cracking like for example yesterday AUVI? Why isn't it cracking the VWAP and like flushing? They have warrants there. Why aren't they doing that? It's like oh they're holding it up and it's holding the highs. If it breaks that high, it might just break out as a squeeze. And then I have like bots on Discord and stuff that watches a lot of things happening all around. Um, you know, Twitter or whatever. I don't even like Twitter, but I have bots on Twitter following certain people and certain crowds and systematic traders, for example. I am a discretionary trader, but I like to be aware of everything. And I know systematic traders in general, they use the high of day as their stop loss. So, and I know they like to wait for the all day fade. Things don't just all day fade. There's a very low percentage of them that do like 30, 40%, but like you can still find edge doing that. But I do know like if the stock is not fading and is holding, if it comes near that high of day, it's probably going to break out because all these systematic shorts, it just doesn't take that many of them. 50 to 100 of them, boom, it could that's the ignition. And then you have a big whale in there that's holding it with an oversized position and the broker's calling him up and he's like, hey, what are you gonna do with this, man? You watching your monitor? And I know because I've been there myself. The broker in the past, broker called, and then all of a sudden he just presses eject, and those little 40, 50 short sellers that covered with 50K to 100K accounts, they covered responsible loss. They took a max loss or whatever. Now that big whale is forced to cover because like the price of the stock is at that level, and then he covers and causes a massive squeeze. Then you got to halt up, and that's what happened with AUVI. And then like another big short seller gets, you know, full blown mass like a stock, and the AUVI had dilution, which is crazy. So I don't know if you want to go over AUVI, um, but yeah, any questions on that? That whole
Yeah,
process?
like I think you explained very, very nicely, and there were a lot of terms to cover. But I would first like to ask, like, what is SSR and how does it help you make a decision whether you want to short a stock or not?
Excellent. Okay, so SSR is short sale restriction. So after a stock falls 10% down, it triggers SSR. SSR came into play, I think, after like the stock market crash or something in the 90s, 1999. And because short sellers get the blame for a lot of things. Oh, the short sellers caused the crash. People need something to blame, and the politicians and stuff that don't know about trading, they pass the laws, and they pass this law. Oh, we're gonna limit the short sellers' effect on pushing the price down. So once a stock falls 10% down on listed stocks, not OTCs. OTCs, they can just, it doesn't matter. But listed stocks, once it hits 10%, it triggers SSR. Now, if a short seller wants to short it, they can only short it on an uptick, which means um, a bidder has to bid higher than the price of the stock's current price. So if the stock's trading at like $1, you can't short it at $1. You have to short it at 101. So if a bidder comes up at 101, then you can short it. And then after that short, it has to it, that that the stock's price is 101. Now for another short seller to short it, it would have to go to 102, and then that short seller can short that. Now, what the thing is, what does this means is when you're watching price action on the level 2, you can see. So if there's a seller on the tape and the seller's price keeps going up, 1 cent at a time, that's a short seller. So shorts are still watching this. It's like a lion in the bushes, like they're trying to attack the prey, but they can't. So now, then when the bidder goes steps up and it gets taken out, you're like, okay, that's a short seller. So that's why I was saying earlier, like someone with technology or some kind of level of meticulous, the, they can do it. They can figure it out where the short seller are. Like imagine you're like, okay, 101, that seller was going up. They can track it, and then they plot it on a chart. They could put like a bubble and be like, bam, that is a 100K short seller right there, and that's this one right there, this one right there, and it's like a book map for shorts. So for me, when I was starting out, starting to get profitable, and even like my first year of profitability, it's better, I think, to just like, if a stock is on SSR, don't short it, or it's not worth it because you need an extra level of conviction. You need to size in differently. It's a lot. It's a lot more intricate. There's a lot of things more at play. It's the trade thesis can be the same, but your sizing in is a lot. There's a higher level of understanding of scaling in and and SSR, and who's buying the stock, because like people dip buy if the stock is 10% down. It's so actually, if a stock is like, I only short on strength either way. So I've never shorted on weakness. So if a stock, I've never chased a stock down. So for example, if a short report fund, or what do you call it, short report outlet comes out and says, like Hindenburg, I don't know if you're familiar with Hindenburg, Vesh,
Yeah.
maybe you are. So if they say, oh, this stock is a scam, and then everybody shorts it, and the stock falls 3%, 4%, 5%, I'm not going to chase that down. I know myself, my strength is shorting on strength. A parabolic move that like comes out of nowhere, little news, the float checks out, no institutional presence, everything checks out. You go through your checklist, and it checks out. That's what I trade, and you want to come up with a way of trading. You want that you're able to replicate over and over and over and over, and shorting on weakness, I can't replicate that. So it's going to get you in bad habits. Like Hindenburg's not going to come out with a short report every day, and a lot of these short reports they squeeze because too many shorts are in it. But but yeah, SSR. So once that Hindenburg report comes out, and it falls below 10%, it can start to float back up because now like the shorts can't pound it down anymore. Now it's going to need sell like people that have the stock to sell it. And that's harder to do. A lot of people are stubborn and they don't just sell it. Um, so or unless there's dilution or something. So, that but that's why like with SSR, I will short these days if it if it's up on SSR 30, 40, 50, 60, and if everything checks out. I'm not just shorting on percentages. I mean, everything has to line up, and and I will short it like when it's up. I'm not gonna chase it down. Um, Yesterday, for example, there was a stock SWVL Swivel. It was a bus company based out of Dubai. They do bus. It's like an Uber for buses, like in third world countries, but they do some regular cities too. That one had a move from the past, had like 11-day green day, 11 days in a row green, from like less than $1 to $6, $7 or something like $6. And yesterday had the first red day, and I was anticipating. I did a trade review about it on YouTube and everything. I said this is likely to have a first red day because it had a really big extension on that final day of the pump, and that one had a red day. And like I'm not gonna it went down like 25%, but I even though it's a first red day high conviction play that it's first red days sometimes they go like 10% down, sometimes 20% down. So I've seen them all the way down as 60, 70, 80% down, depending. But I'm not going to chase it down. Like I'm always going to short on strength. So I called the first red day, but I didn't. I got a tiny piece of it because it extended for a moment, and that was it. I was done because like that's not the way I trade. So you got to know like how you trade and like what your strengths are over a period of time. That comes with experience too, and journaling and tracking. You got to see like what your strengths are, and you just replicate your strengths. I'm pretty sure. So I know you do tennis, you a high level of tennis. So it's like think about it, like like your repetition, your strength. You want to maximize your area of your strength. So you want to. Yeah. So like you want to relate it to that maybe. Yeah.
Correct, correct. And you mentioned checklist, and I want to ask you like how much criteria or rules are there in your checklist?
Okay. So I don't know off the top of my head the certain amount. I do know when I got interviewed for a Business Insider article. The journalist contacted me last year, and for like a week straight, or 2 weeks, I think, she was working on the article, and like she was like really trying to understand everything and get it down, and like her brain would like she'll ask me questions like pause that. I'll go on like I'll talk a lot, and she's like stop right there. We need to get this to be understandable for like the regular person. This is very high, like it's too confusing. And she said, I'm going to make you a list of your rules. Okay, the first one, this. Second one, over like a period of a few days. And I was like, you know what? That's actually really good. She made it so concise because she's a writer, you know. They put things into words. And she understands trading and stocks. She's interviewed a lot of successful traders. And she came up with nine. And I was like, okay, so off the top of my head, I'm saying nine because she wrote down nine and it was really good. It was crazy is I said exactly what I do. It's not a secret. People want to keep things secret. Your edge is secret. Like I'm not even secret, because that's the thing. I'm a discretionary trader too. It's really hard to like just copy everything because there's so much into play. But okay, so let's go over the checklist. So if I'm going over a trade, I'm doing this off the top of my head. So like because I don't have the charts in front of me, it's not like a trading day. But the first thing I'm looking at is float. What's the float? I go to dilution tracker for the float. If the float is under 1 million, it's a no trade. I don't trade nano floats no matter what. Up to this point in my career, that's a hard no. In the past, to be like, oh, certain situations, but you have so much data now after experience. I had 4 or 5 years experience. Like I've never done well with them, so it's not even worth it. Okay, so the float, um, debt. I look at debt. Debt is a more difficult concept. I've come up with last year. I fully understood it. I kind of understood it before that, but dilution tracker is starting to really. make make it really easier to spot this. It's about spotting it. So the debt, if the debt is really way, if the debt is way more than the market cap, it's an avoid. Like for example, you see like a 10 million market cap, 50 million market cap, and the debt is like 500,000, no, yeah, no, like a billion or something, or like the market cap is 100 million, and the debt is like a 2 billion or something. It's like these things can go, like it's too insane, So it's like I'm avoiding high debt stocks. Um, if a company has a lot of cash and they have, which dilution tracker points it out too, if they have a lot of cash and no dilution, I'm like, this is a healthy company, I'm not touching it. Like, I'm probably not going to trade it. If it's a Chinese company, I don't trade Chinese companies. I just don't do it. um I added Israeli stocks to the list. Israeli stocks have, in the past, given me a lot of headaches, and even though I did pretty well on them overall, I've through journaling and self-reflection and all that, I realize I'm missing a lot of opportunities because I'm getting like in a hard. Israeli stocks are so hard to trade overall in the long run, that it takes a lot of mental capital, and I'm getting stressed out, and like sometimes I hold them overnight because my conviction on the trade, but then the borrow fee rate goes to like 1,000% because they're playing games with so like I was like, you know what, I'm for the mental capital purposes and to focus on better opportunities, I'm gonna take away Israeli stocks. And so I've done that. So those one thing, and also the borrow fee rates. I'm looking at borrow fee rates as an indicator of short squeeze. If something's over 200%, it's a red flag, and it's just all about the concept of putting the puzzle together. So like for example, AUVI yesterday didn't have a borrow fee rate that bad. It had like under 60%, not that much. It could go higher now, but it didn't indicate short squeeze. So it's like one piece of the puzzle. It's not exact. So, and then on top of that, I'm looking at institutional ownership. Dilution Tracker added the most latest current institutional ownership. So institutional ownership, if it's 40%, it's I start to pay attention to the price action. Six to see if an algo is turned on. 60, 70% likely a no trade. Just leave it alone. Um, is there a catalyst? So I'm avoiding certain catalysts. Billionaire plays, biotechs with cancer news, Alzheimer news, I'm paying attention. Biotechs with patents, in that one thing I've noticed recently, they put out a lot of patents. It just pumped the stock. Patent doesn't mean anything. When I was in architecture school, we made patents ourselves, little playing around, So anybody can do a patent. Doesn't mean anything. So it's a pump a lot of times. And why are they pumping it? Who wants to dump shares in this? It's like So I'm looking for that. I'm looking for is there so hot sectors I avoid. Like for example, the crypto sector, I was just avoiding all crypto plays this past week. I know a lot of people make money from crypto. I don't make money from crypto. I go for the easy money, man. So that's one thing. I go for the easy money. There's ways to make money, the hard way or the easy way. The stock market is like I go to Brazilian steakhouse a lot, or I know you're vegetarian, Vesh, but like I don't eat everything in the all you can eat. I don't eat the bread. I'm 39 years old. If I eat the bread and stuff, it's gonna stick to me, and I'm gonna gain weight, and it's not gonna be, I don't know, I'm not gonna be as healthy. So I stick to like a certain diet, and that keeps me clear-minded and focused and feeling good, and that's it. And it's like, I know you were at the Sykes conference, and it was such a good analogy, man. Um, we met over there in 2022, I think, and you stood up and said, "Oh, it's like I forgot the question, but it sticks out to me to this day." And by the way, I've used that analogy many times in my communities and stuff. I said, if you know your identity as a trader, you stick to your rules, man. Even if because people are going to complain about it and people are going to doubt you and give you rebuttals. Like people say, David, but this nano flow, just trade it, man. It's so you get look at it, it just crashed, and I'm like, nope. I'm not, I don't trade nano floats. Just like when you said, I'm vegetarian. I just don't. You put uh, the filet mignon in front of me. I'm like, I'm vegetarian, man, but it's good for you. You have it. I'm not gonna have it. I'm not gonna eat it no matter what, you know. So it's the same thing with trading. It's like, um, you put a nano float, the nano float goes up and crashes. Everybody made $1 billion. I don't know, whatever. I don't care. I just don't do it. And I know those people are developing bad habits, by the way. And in the end, they're gonna lose because I know how it works. I know how it works. You get sloppy. You get rewarded for sloppy behavior. You're gonna keep doing it. Yesterday I interviewed a brain neurologist, a scientist, and he said, yeah, when you reward behaviors, your brain's rewiring, and dopamine is it gets you, dopamine gets let out and its brain rewires, and like you want to develop, you can use it for good. People use it sometimes for drugs and for alcohol, and that goes bad. But for good, if you reward yourself for good things and following rules and journaling and developing habits and doing good things, and like this podcast, for example, you're rewiring your brain. And for example, podcasting has been great for me because like I get to re-listen to it again. You rehearse it, and it's like you're feeding yourself good things constantly. So yeah, my main rules is sticking to the rules, and what not to trade. That's a big thing. So yeah, I know exactly what not to trade, and I repeat it every day. I'm like, I don't trade nano floats. I don't trade high institutional ownership. I don't trade Chinese stocks. I don't trade Israeli stocks. I don't trade high depth stocks. I don't trade high borrow fee rate stocks. So it's like you do it over and over, and it becomes second nature. And then like when I show up to the office, turn on my computer, it's like playing the piano. It's like I know exactly what I'm looking for. You can make so much money just from the easy money. Like I don't need to hit a home run. I'm not looking for $100,000 trade. I'm not looking for a $1 million trade. I'm not looking for any of that. I'm looking for the easy money, several thousand a day. Like 2,000 a day is 500K a year. 4,000 a day is $1 million a year. 1,000 a day is 250K. You do the math. You know, it's like you can do pretty well just with the because and as you get profitable, you're just going for a couple $100, stacks up, and then you're gaining experience. You're not going to be in that box of I'm a $500 a day a trader forever or $100 a day trader forever. You're not in that box. That's what people I think get confused. Um, it's like for example, I had a group of friends. I don't really have them any. I don't talk to them anymore. But like they were they were decent traders when I was starting out. And they're like, yeah, this is. They introduced me to their other friends at traders. They're like, this is David. He makes like 1,000 a day, and that was cool, I guess, at the time. But then I was like 6 months later, it's like they still think they had that vision of me and they put me in that box of like that's who I am. That's not how it is. With trading, you're constantly improving, so it's like it's gonna compound. So you're building constantly. You can start with whatever it is, just get profitable, and then you build upon that and upon that and upon that. And just yeah, that's the way it works. So.
Do you yourself like set goals for yourself? Like, you mentioned that they were describing you as a $1,000 trader. Like at this moment in time, do you say like, oh, I want to make 10 grand on a day or this ticker, or you just going with the flow and just working on your process?
That's a very good question, Vesh. So no, I do know from tracking so experience is important because you tracked your data and you've seen your performance over a couple of years, few years. So you know on average how you can perform, you know how much you can make. So for example, now I approach the market, I'm like, whatever the market gives me, I know I can pull money out of the market. If some easy play goes up, I just need one or two, one trade, I can pull out decent amount of money, anywhere from 1 to 10K on if an A setup shows up. Um, so but and like you know what I mean? So like I'm not really. there's no, and like I don't care because I know tomorrow there's gonna be a play. I know next week there's gonna be a play. So like I'm not concerned about like how much I'm gonna make today. It just so happens. However, I do when I see something pop up, I will test it out with a small size. So I'm constantly taking shots with small size because, like, when I see an opportunity, I don't want to be able to flinch. You know what I mean? So I want to take that practice. So I will. That's why if you look at my P&Ls, I have like some trades: $20 win, $10 win, $8 win, 80. Then you'll see one with 5,000, 6,000, 2,000, 3,000. It's because I took those shots while I was waiting for my setup and it didn't set up. So I just got out for break even or very small green or small red. Um, so I think that that's like tennis. Like you don't want to just sit there and wait. You got to take your shot, you know? So, but however, you don't want to oversize. So you want to be in that mode where like you're ready, you know? So that's, so like that's where I want to be mostly because I know what I'm capable of. And, that comes with like experience and also a lot of work that I've done mentally. So I have a partner that I did the trading conscious trading academy with that I started. He is a mind alchemist and he does a lot of like a neural transformational person, tools and all this. He's really like a mental performance coach, put it that way. So I did a lot of work with him about a year and a half ago, and because I kept hitting this like ceiling because I kept relating to money like my previous career in architecture or like when I was this is deep, man. So like when I was growing up, my parents were both immigrants. They came here and they worked hard and they went to school and I was socially conditioned just to you know money's made by the hour. Money's hard to come by. You got to save your money. You got to go to college, have a salary, have a profession. So like that 70K is a lot, 100K is a lot. Wow, six-figure career. Oh my God, I work 9 to 5, 6 figures. So like so many years of this, and as I was learning, as I was in the in the early stages of like the psychs courses and stuff. This is 2016. I would drive Uber. Uh, I drove Uber 3,000 rides, Lyft about 1,500. I did all these part-time jobs. I did tutoring, and I would get paid by the hour. For Uber driving, I would go drive for $100 a day, and then 10 hours, $10 an hour, pretty much. And then now all of a sudden I'm learning trading and I get profitable and now like the market goes crazy in 2020 and I'm making some money. Now like I start the thoughts creep in my head. Um, oh, so I was making $100 a day with Uber. Now I made 1,000. Oh my God, like this is crazy. And I'll get into like scarcity mode, like I gotta take this money out, wire money out, and I gotta like so so once I hit 1,000, like I would freak out a little bit, and I wouldn't admit it. Now I'm looking back and reflecting on it, but at the now I understand what was going on. So after 1,000, my behaviors would change, and like I was more susceptible to flinching and messing up. In sports, this is probably something similar too. You know, I know like with baseball, like I don't know if you're familiar with baseball, but like a pitcher they have these things called perfect games. At like the ninth inning, at the last out, the last piece of the game, they mess it up. Like it's a historic. If you look up the stats, the last one, because it's in their head. They're like, oh my God, I got one more out to go. I can't mess this up. I can't mess this up. And they mess up. So, when, excuse me.
No problem.
Yeah.
No, I
So
mean
when, yeah,
in like sports and especially tennis, there's a saying, it's always the hardest to close out the match because that's when it gets in your head.
yeah, it's crazy, man. So when I started to work with Sam, and he's like, we did a lot of deep work, and one thing was like my self-worth. I am worthy of success. I did all the work. I started to kind of like move away from my previous life. It's like a second life now. My life of salary and hourly wages and like all that conditioning from my childhood and stuff. And now it's like I am worthy of success. It's like the size I'm putting is just another zero. 1,000 shares, another zero, 10,000 shares, 500 shares, 5,000 shares. What's the big deal? Why can't I have $100,000 a month? I was having, instead of 1,000 a day. Why can't I have a $10,000 day? Why what's holding, like, why? So like it's tied to my self-worth, and like I'm not in scarcity. I had a full, I remember I used to wire the money out of my bank account because I was in scarcity. I had like 2021 or so, I don't know, a few $100,000 from, but like after just making so $1,000 days for so long, I was just get scared and take it out. And then, but like I
Yeah,
was doing nothing with it. I just had it in my bank account, and like it's just doing nothing. It's depreciating actually because like I was so scared. I was so then when I did the work with Sam, I was like, oh, so my dad was like that. Like my dad came from Iran. He would just save, save, save because, and like my mom escaped communism from Cuba, and they went to, so like it's like, all those it's, when you're growing up you're getting these habits, like, oh my God, it's like I gotta break from that. I gotta break from that. If not, I'm gonna end up like, just saving, hoarding everything. I don't want to be that. I want to grow as a trader. So like you gotta like recondition yourself, and like, it's like do a lot of work to change that mindset of like that mental block, because so like, yeah, I so that's what I'm saying. So now it's like whatever the market gives me, I'm taking advantage of the opportunity. And in small caps, there's always a limit to small caps. There's only a certain amount of you can make from it. But you can, it's so far out there. You can make 100 million probably doing small caps over a few years, of course, not in 1 year. So that's more than enough to play with. You got more than enough to be occupied, and then you can grow. Once you hit 100 million, then you can worry about it later, or go to something else. So.
correct, correct. And you know what? You mentioned a lot of criteria, and you also mentioned data tracking. So I'm not sure if you have tracked data, like how many opportunities you get in a year, because I feel like if someone has that much of data, like they won't freak out to trade every single opportunity because they know something else will come up.
Good question. So with data, I don't keep track of it anymore that detailed, but I do. I have friends that do, and they tell me, and I interview people on my podcast that are keeping track of that constantly. So like for example, really really good first red days that you can really bank on and size on, which I don't take advantage of anymore because I just focus on what I do and replicate it over and over. Those come a few times a year, maybe 5 times a year, a good, solid, thick first red day, you know. So those will happen a few times a year. Um, but like what I'm trading is uh, mostly what I've done the past, I don't know, 6 months or so is like really double down on what my strengths are, which is like piecing the puzzle of what's going on with the stock, and just like a high level of concentration of trades in that one moment where I have everything lines up. That one moment, I'll recycle shares constantly into that one moment, and I'll get the move, and then I'm out. I disappear. So it's like being very nimble. So like I'm not a institution. I'm not a whale. So I'm being nimble, like Rambo. You ever seen this movie Rambo?
Correct.
Yeah, he's in the trees. He's hiding with his machine gun, and he comes out. He's like, "Bah," then he goes back in the trees, disappears, and runs to another tree.
Hmm.
So like being like that, as opposed to just being like a big army or something, just like you're oversized. So I've just, so knowing what kind of trader you are, because like if I was like under PDT, then I would trade. For example, oh, this is one thing I did very well when I was starting out. I I knew, okay, paid pump and dumps, very clear to me. I'm only trading that. And I traded only paid pump and dumps, and I didn't make much money, but I stayed green, barely, I'm making I think over like 2 or 3 years I made just like barely like a few $1,000s. It's not any money. You don't take the money out. You just leave it in the account, and you're not living off it or anything. But I did learn. I did stick around and learn. In 2016, I wasn't studying as hardcore as I should have, but I did see DRYS, one of the biggest squeezes before the pandemic. I did see KBIO. I did see I understood them, and so I understood these short squeezes, after hour squeeze, nano float squeeze. I saw certain traders uh go from a couple thousand to a million. I had I did have I got to see that because like I was watching, so um whatever your account size you have or whatever, the main thing is you gotta stick to your strengths, and like especially in the beginning, you want to increase your time for trading. You don't want to have an outlier loss, so you can't trade everything. You can't be over trading. You can't trade what other people are trading. You can't, the noise of like, okay, this worked for that person, let me try it. Like, what works for them, it's like it might not work for you. That's one thing I did starting out. It's like I know I was good with paid pump and dumps, and people were saying, "Oh, paid pump and dumps are over," and I was like,
Yeah,
"Hey, either way, like this is a very safe way to trade. I'm not looking to make money. I'm just gonna get a couple $100 every week or 2 weeks is fine for me, man, at that time. And instead of trading the nano fluid, the hottest one, everybody wants to trade the hottest one, and they have a small account. They're trying to trade, and then some crazy thing happens, and they have an outlier loss. You don't see them again. You don't want that to be you. So
correct. And like, so are there any security parameters you have set for your account because you're primarily a short seller to not get blown away by these crazy nano
yeah,
floaters?
absolutely. Well, first, I don't trade the nanofloats. So,
Oh,
yeah, I've
sorry,
taken
yeah.
a few precautions, and I think everybody needs to have a max stop loss through the broker. Most brokers can do it. Um, E-Trade and things, I don't think they do it, but like you got to have a max loss. Another thing, so for my brokers, I have that max loss at $10,000. And then second of all, I have a max share size, only 5,000 shares in all my brokers. So the 5,000 keeps me, um, even though I have multiple brokers, they're all 5,000 shares. And I've noticed I focus well when it's 5,000 because it's like speeding with the car. Like if you have a speed limit, you're always gonna have in your head that speed limit, so your judgment is gonna like scale in appropriate to that. So I'm more laser focused on like the I'm micromanaging in a way that the scaling it much better when I keep that size at 5,000. And then when I have extra conviction, it's like I'm making better decisions when I'm able to tap into the other broker and add that, and then I recycle them. And then so like I'm recycling it, and if it extends more and I'm strong on the thesis, I make a quick decision and I'm gonna go into another broker and I recycle them again. So like that's what I'm doing. So I have a max share, and also it limits my exposure. So 5,000 shares per ticker, 10,000 share max loss, and also I have a whole list of every single Chinese stock on the market, and also Chinese stocks with a high or stocks with a lot of Chinese insiders are red flagged, and I made an Excel sheet and I gave it to the brokers and they blocked them all out. I can't even trade them if I want it. So I did that because, I saw, yeah, I've had big losses on Chinese stocks in the past, and I want to stop that, So also, I've had friends and people I've interviewed on the podcast. I interviewed one person on the podcast. He actually, last year, he blew up on TOP, and he like
Yeah.
owed like a few million to his broker. He had a hedge fund and everything. I was like, oh my God. So that, yeah, so like, I don't want anything to do with this stuff, man. And I've interviewed every single Chinese expert on the whole market pretty much, and I've come to the conclusion it's not, I don't want anything to jeopardize my career. So just block them all out. Um, what else have I done? In the past, this year I changed it. Now, like I'm going, it's different now. But in the past, what served me very well was for every account, I limit one ticker per account, at a time. So if let's say if one ticker were to short squeeze, it's contained in that account. So that's one way to do it. But I don't do that anymore. Now it's like because I have the max stop loss. So the max stop loss is good, but the max stop loss, It doesn't work in the after hours. So you know, so you gotta be careful with that. You gotta have a mental max stop. You gotta have like you have to be there manually do it. Um, what else? Uh, that's about it, man. Just being strict with the rules, man. No nano floats. The nano floats are the worst because even if you do have a broker stop loss, it can skip through it. I don't know if you're
Interesting.
familiar with that because like there's not enough liquidity. So these are things that a lot of people don't understand. They're like, oh, I remember I was in Puerto Rico and trading out of an office there, and they had like it was a like a WeWork in a way for traders. They had a few desks that were open for everybody to come in and whoever wants to pay by the week or something by the day. And I remember I said to one tr I was talking to some traders that came in, and they're like, "Oh, why do you have two brokers?" At the time, I had two, and I was like, "Oh, it's just in case one goes bad or something, you have a backup. You always have a backup." And you guys, no, just have really good risk management, bro. It's really good risk management. You have it on one broker. It's just really good risk management. And these were systematic traders. And then all of a sudden, there was a stock, ILAG, like a year later, ILAG, a Chinese stock that wasn't even a nano float, but they lock the Chinese, they take up the shares, they lock up the float. So basically, it is a nano float, but nobody knows it's a nano float except them. And it was locked up and it squeezed, and I heard they owe money to their broker. You know what I mean? So yeah, so and they had the best risk management. The thing is, they couldn't get out. So when the stock halts up, they're stuck in the trade. It's halted. They can't get out. And then when it opens up, it goes immediately into another halt. So it's like a movie theater, and like it's full, and you say fire, and not everybody can get out at once because there's a small door. So this is supply and demand. So it's like, you know, um, I think those traders are doing fine now, but they suffered a major setback. But but yeah, so basically you avoid that by no nano floats and no Chinese stocks.
Correct.
So yeah.
Yeah, David, that sounds awesome. And how, like, now talking about your future plans, is there anything you are working on and looking forward to improve on going into this year?
Okay, so yeah, just I had a really good end of the year last year and just building on all my good habits, doubling down on all my good habits, good routines. I have a really good routine with like my lifestyle and stuff, exercising, reading, healthy relationships, minimizing my stress by sticking to my rules, staying flat on all my positions, don't swing in stocks, don't bag holding, no sticking to the rules, don't breaking the rules because in the past it'd be like, oh, that's a nano float. Let me try a little small size. None of that. Just no nano floats. It's like you're vegetarian. You put a filet mignon into just a tiny bit, man. It's like you're not gonna do it. It's like it doesn't matter. Just try a tiny bit. It's like it's not gonna matter. But so yeah, no nano floats. And just stick to the rules. Get rest. Um, yeah, just and enjoy life, you know what I mean? Just yeah, that's what I'm working on.
I've been following you and I'm really curious to ask. I know you track your sleep. Do you think it has helped you in your trading?
Yeah, that's a good question. So you got to earn it though. I didn't sleep. I must have slept like 2, 3 hours a day, maybe less. A lot of on average. So a lot of days is less than that, and a lot of days, some days a little bit more than that. Um, yeah. So from 2019 up until 2022, it was like that. I would average probably one day. I mean, who knows what it is, but it's like 1 hour one day and then 5 hours like 2 days later. 1 hour, then 2 hours and five. It's like it was very little sleep, but like all I could think about was stocks and trading and success, and I got to make this work. And like this is gonna change my life. I can't live in debt from student loans. I can't. I don't want to live a career from 9 to 5, driving to work, working, pretending I'm. So as an architect, you got to in the real world, you got to pretend you're working because if you work too fast, you're gonna, you have nothing to do the rest of the day. So and then they're gonna, you're gonna sit there like, so you got to pretend you're working. And I was like, I don't want to do that, man. Driving traffic back, have the weekend off. I don't want to do that. So like, it just was a nightmare. And then imagining myself at 60 years old with the retirement and like, I was like, oh my God, I can't do that. So like, I like trading was the solution for me. I had to figure it out. So like, I couldn't sleep. I was just constantly thinking, working on and watching videos and improving. So but then after you get profitable, so the thing is with trading is like there's only so much you can learn as far, which is crazy because I was really finding stuff like what else can I learn? And it just became less technicals and less fundamentals. Okay, now I got that. I just need a few. I still study it, but like 2 hours, an hour a day or something like that. It's not 8 hours a day, 10 hours a day, 12 hours, 20. It's none of that. So then now it's like, okay, in order for my growth, I need to work on other things. I need to work on more mind stuff, more mental game, more of my health. Where does the edge come in now? It's like a professional athlete, like an Olympic athlete. I need to get rest. This is how my level is now. So I need to get like really good rest. So like, and I need to eat like really, I eat well, like eat healthy, drink water, hydrate. So this is where like working on now. So yeah, the sleep, I will get my 8 hours sleep, and it's really boring. I don't have a night. I don't go for nightlife. Um, you know what I mean? Yesterday I went to bed. I watched the movie The Beekeeper. It's a really sick movie. This guy, Jason Statham, goes on a rampage. It's a fun movie to watch. But after that, I went to bed. I was up at 7 in the morning today. I had a podcast earlier. So, but I got my 8 hours, and I'll
Correct.
track it. Yeah. So now I get my sleep. But with trading, you got so much to learn. So in the beginning, I don't advocate. Don't it's if you have yeah, in the beginning it's gonna take a lot of work. I don't think you're gonna be sleeping that well, but I don't
Correct.
know.
Okay, you mentioned about podcasts. I want to end it with asking you about two things. First, please mention about your podcast and how it can help people, and the other one, your Conscious Trading Academy and the conferences I know you're going to be doing going forward this year. How can it help the beginners, intermediate, and advanced traders? And just share your thoughts about it.
Yeah, absolutely. So the podcast was game changer for me. It was one of the ways I connected with a lot of successful people, just like you're doing right now. So I did the same thing myself. I saw people I was interested in, stuff I was listening to their stuff, books I read of theirs, and I would prepare questions, or like I know what their backstory is, and I would ask them and engage and connect with them. And you get to see with my podcast, you get to see my whole journey. And for example, if you look at my early podcast, I'm like a different person, you know, um, 'cause I'm searching for answers for questions I have, and like you can see, but like I always had a thirst for knowledge. And then as I become like profitable and successful, you get to see my change, my evolution, transformation. So the podcast is great. Yesterday I did like for example, I did a scientist yesterday, a neurologist that did like this brain app for that Tom Brady, the football player, he uses, and I use it too. So I invited him. Day before that, or a couple days, I interviewed one of the top Chinese analysts of all Chinese stocks, talking about all the fraud and stuff that goes on with Chinese stocks. Before that, Christmas Day, like 2, 3 weeks ago, or no, like a month ago, I had Jack Schwager on for the third time. So, I mean, yeah, the podcast is awesome. I'm glad you're doing it. People missing out because anybody can start a podcast. It's just you're building habits that lead for the long run. But yeah, and then on top of that, I met my partner Sam DeGash for the Conscious Training Academy through the podcast. And after we worked together, the idea of an academy came up, and it's incredible. And we created this beautiful academy, and it's yeah, we had the first conference last year in September in LA, and Yeah, it was amazing. And now we're having another conference in March. So it's a 3-day conference. However, the f- the Saturday is the main event. So if people just want to come for one day, there's a ticket just for one day. There's also a VIP ticket for all three that has a mastermind the first before the conference, the day before, and the day after. And so right now I'm in the U.S. Bank Tower skyscraper in downtown LA. We're gonna go to the 54th floor for the March 1st mastermind. Beautiful environment, and some traders are coming in from all over the world, and we're gonna talk intimately about trading and skills and like any questions that you have, and we're gonna go deep and discuss everything concerning trading. And Saturday, 9 a.m. to 5 p.m., Sam is flying in from Dubai. He's going to be there Friday too. He's flying in from Dubai to co-host a conference with me and going deep into the mind and deep into skills. And I'm going to share things I've never shared before with trading. And then Sunday, another mastermind at the Athletic Club, which is a social club that I'm part of. It's a beautiful space in there. Like Charlie Chaplin and Marilyn Monroe used to hang out there and stuff. And we're going to talk about trading and have another really deep session. And yeah, after the conference on Saturday, we're going to go to the steakhouse. Um, yeah. Oh, actually, yeah, vegetarians are welcome too. They have other things in the menu. So yeah, there's going to be vegetarian options. But yeah, no, it's just I love these conferences because I get to meet people. I love trading. Trading has I don't know what I'd be doing if I wasn't trading. I really don't. Like I'd be stuck in a 9 to 5 job and like not just like not reaching my full potential. So with trading, I can reach my full potential. I can take it as far as I want. I got money to do things that I want to do that I have freedom with, travel. So yeah, I love it. So I can talk about it. That's why like the mastermind, the conference is great because I get to see people that, so like the people that come to these things, I tend to attract like people that are serious and like they like my podcast. They've seen me on there for like hundreds of hours or something. And it's I love it, man. It's a great opportunity. So
Absolutely, man. And I think, that's how I was able to meet you and, meet other people as well. It's a great way to learn and just know about the field in itself a bit more. And I really appreciate you coming on the show and congratulate for all your success and good luck in future. But before you go, please mention your socials where people can connect with you.
yeah, I like to connect with Instagram mostly. Instagram is very it's more interactive for me. It's fun and I enjoy it. And LinkedIn is good too. I like LinkedIn. Twitter, I don't have it on my phone. I think it's a toxic environment. Um, so I limit my access to it. But you can connect with me there too if you want. Um, ConsciousReadingAcademy.com we have a newsletter and you get to see everything we're up to there. What else? Yeah, and the Friendly Bear podcast, of course.
Correct. Oh, awesome. This will be mentioned in the show notes, and I really appreciate you coming on the show. And it's my first trader interview, so I hope I'll get more people to interview and just interact with, providing people with knowledge and educate the world. Because I feel like on US side, people are more educated in terms of stock market and trading because US market are the biggest. But I feel like I bring background from Asia and like educating people over there, it's gonna be worth it, I think. So thank you so much for coming on the show.
Absolutely, anytime, Vesh. And if you need any recommendations for your show, I want to see you succeed, man. I think you have you've been putting a lot of work. I've seen your growth. So like yeah, it's been a pleasure, man.
Thank you, David.
All right.
Hey viewers, I'm back. Thank you so much for listening to this episode. Please like, share, subscribe, and write in the comment section below which part of this episode you really enjoyed it. I would like to bring more guests like David and just provide more education to the world out there. I'm really grateful that you are being part of this family. It's a journey, it's a process, just like the trading he mentioned in the episode. So, I'm really thankful to you again for listening to this episode, and I'll catch up with you in the next one. Peace.